Good evening, ladies and gentlemen. I would like to start by introducing our team, Bogdan, Yulia, Yevgen, Anastasia, and me, Zahar. It's a great honor for us to be here and present the results of our research on RTL Group, which is a leading European media entertainment network in terms of successful broadcasting activity, strong content production, and digital development. We issued a buy recommendation with the target share price of 87.28 euros at our local final. However, the recent macroeconomic changes in Europe and the latest financial results made us update our analysis. Thus, we received a target share price of 99.31 euros with 1 year holding period return of 36%. Now Yulia will start with business description.
RTL Group is a leading media and entertainment network which benefits from wide broadcasting reach, strong content production, and expansion of digital segment. German media corporation Bertelsmann holds 75% stake, while 24% of equity is free float. RTL Group is listed on 3 stock exchanges: Luxembourg, Frankfurt, and Brussels. RTL Group competitive business model focuses on 3 main pillars: broadcast, content, and digital. Firstly, it owns 52 TV channels and 29 radio stations. Secondly, it distributes content to over 200 countries. Thirdly, having over 36 billion online video views, RTL is among top 5 in the world. RTL Group has leading audience shares in Germany, France, the Netherlands, and Belgium. Moreover, the company has launched 2 new channels in Asia as part of a joint venture with CBS Corporation. As a result of industry consolidation, the production subsidiary Fremantle Media is represented globally. It operates in 4 directions: production and distribution of hit formats, exploitation of its brands, and digital promotion. Digital pillar of RTL Group includes video on-demand services, over-the-top television, multi-channel networks, and programmatic online video advertising platform. RTL generates revenue from pay and free-to-air channels, licenses and program rights, as well as subscription-based video services and online video advertising sales. Take a look at the company's revenue structure, where advertising holds about 60%. Due to this structure and progressive strategy, by 2018, about 5% growth in EPS is expected. Now back to Zahar for industry overview.
Entertainment and media is a mature and cyclical market where global companies are dominant. That determines incredibly high barriers to entry. Media industry is expected to grow sustainably over the next 4 years. The fastest growing and attractive are Asia Pacific and Latin America markets. Advertising holds a key role in the media industry and represents 58% in RTL's revenue structure and 71% on average among peers. General downsides and upsides in economy cause corresponding fluctuations in the ad market. Well-diversified revenue structure enables company to overcome general weaknesses. For instance, in 2012, due to launch of new TV channels and increased revenue from content production business. Nowadays, EMEA is going through radical transformations, where networks are exposed to the following industry trends. First, digitization. Digital will become the main driver of the global media market. Second, media fragmentation. Number of specialized channels has increased over the years, requiring more differentiated content. Third, time-shifted television. Growing popularity of video on-demand services changes the approaches of ads delivery. Fourth, multi-platform TV. Television starts to appear on different devices. And finally, growing role of programmatic advertising in the ad market. Among its peers, across Germany, France, and the Netherlands, RTL is a disputed leader in the TV advertising segment, having 29, 22, and 32% market share respectively, is a direct result of strong families of channels as well as synergy effect from RTL companies cooperation. Such competitive position of the company is determined by numerous factors. First of all, company runs leading families of channels in most Western European countries. Then, RTL manages leading MCNs on YouTube. Next, holding a majority stake in Sport Exchange strengthens RTL's position in programmatic advertising. In addition, company already operates in the rapidly growing Asian market in a partnership with CBS Corporation. And finally, company provides own businesses with high-quality content and distributes it all over the world. Now Yevhen will cover the financial analysis.
Taking into account advertising spending and macroeconomic fundamentals, we derived revenue growth rate for each of RTL's profit centers. According to our research, the company's revenue is anticipated to grow by 2.7% till 2019, with a consistent increase in operating profit by 4.9%. Furthermore, the preceding cost efficiency program and the recovery in Fremantle's marginality in the middle run will lead to the increase of RTL's EBITDA margin up to 24% in 2019. Additionally, such potential earnings catalysts as implementation of quantitative easing program in Europe, increase in retransmission fees, and the most important one, surge in digital revenue with incredible 16% CAGR will translate into solid operating cash flows of RTL, which tend to grow by approximately 7% annually up to 1.3 billion euros in 2018. Moreover, RTL benefits from geographic diversification, with main cash generation areas being Germany, France, and the USA. We also predict a substantial increase in RTL's return on equity, up to 28% in 2019. That will be mainly driven by a considerable rise in financial leverage. Other ROE drivers are a 1.4% improvement in net profit margin and a growth in asset turnover. RTL historically delivered higher dividend yield than median across its competitors. As the result of such high dividend payouts, its underleveraged balance sheet changed in 2014, with RTL's book debt-to-equity ratio reaching 0.34, which is still conservative compared to other European broadcasters. And lastly, ladies and gentlemen, thanks to its strong cash generation capabilities, the group is able to sustain financial flexibility, which allows RTL both to fund its growth strategy and provide substantial cash returns to its shareholders. And now moving on to valuation with Anastasia.
To derive a share price, we applied both DCF and relative valuation approaches. DCF analysis is based on free cash flow to firm forecasts and captures both intrinsic value and growth prospects of RTL. We applied different WACC measures for 5-year and residual periods due to changes in RTL's capital structure. By 1.5% terminal growth rate and corresponding WACC, we have arrived at the share price of 97.18 euros. In comparison, we also implemented bull and bear scenarios, which incorporate the most extreme cases of advertising market developments. Market bet methodology was used as the basis for sum of the parts valuation and general peers. We based our sum of the parts approach on peers analysis for each profit center using 2-year forward multiples. Derived EVs and share price from peers multiple have been weighted on each profit center's share of revenue. With the sum of all parts, we have arrived at the share price of 92.57 euros. Selecting appropriate P group for each profit center is a challenge, so that we applied only 30% for sum of the parts valuation, while 70% for DCF, and got target share price of 95.80 euros. P group for general peers is represented by public European broadcasting companies with TV channels in their portfolio. They are ProSiebenSat.1, TF1 Group, Sky plc, ITV plc, and Energy Group. Using forward EV to sales, EV to EBITDA, and EV to EBIT, we have arrived at a corresponding range for our target share price. And now Bogdan will cover risk analysis.
We have distributed the key risk factors across the following categories: market risks, legal, operational, and financial. Macroeconomic fluctuations is the primary market risk factor for RTL. A correlation of 94% between ad market spending and GDP indicates potential for losses during a declining cycle. The launch of Netflix in Western Europe has the highest probability of losses at 80%. Fortunately, this risk would be more harmful to our competitors, ProSiebenSat and TF1, due to differing target audiences. Negative exchange rate differences for RTL's content division Fremantle Media should be minimal as a result of a 70% correlation and a sizable USD appreciation against Euro in 2015. Political risk for RTL Group is represented by tensions between Russia and Europe, Islamic State activity in the Middle East, as well as policies of European governments, which affect the share price in both ways. By applying the probabilities of losses and gains to each scenario, we received a €3.51 increase, arriving at our final target price of €99.31. To confirm this price, we have applied a Monte Carlo simulation. The research has shown that our target price is close to the average values of the distribution and is highly credible. To sum up, sustaining a solid position on the European market, gradually shifting to digital operations while having strong financials, the support of its main shareholder Bertelsmann, as well as stable growth, brings us to our final conclusion, a buy recommendation. Thank you for your attention. Questions are welcome.